Assalamualaikum and greeting to our respected lecturer, Sir Muhammad Hakimi Harman. This video is regarding to our group assignment for financial management subject and analysis of corporate financial performance, a trend and comparative study of Seng Industries Berhad and Huatai Industries Berhad. To start our presentation, let me introduce my teammates. First, my name is Nur Alia Husna. Next, Nur Zulaika, Anis Farhana, Siti Nur Ashikin and Safia Adrina. For this group assignment, we chose to analyze corporate financial performance for Seng Industries Berhad and Huatai Industries Berhad from year 2016 to 2020 and compute the performance indicators such as liquidity, leverage, activity, and profitability. We are interested in exploring both companies' financial report as they are involved in the same industries, which is food and beverage, and have similar focus product, which is biscuit. Even though both of the companies are not as big as Nestle, they exceed our expectation when they invest in stocks. Seng Industries Berhad was founded on 4 October 1991 and then listed on the main board of Bursa Malaysia Securities Berhad on 2 November 2000. Seng, which translates to Success with Teamwork in Chinese, is a partnership by the 4 founding directors of the group, who are brothers. Seng's core activities are investment holding companies engaged in the manufacture and sales of biscuits and confectionery food items. One of their strengths is the success of the new product mix, where the customer can choose a wide range of product combination as they serve different customer segments. However, one of their weaknesses is the pressure in gross margin and operating margin as the existing competitors in the same industry.
Now, I will talk about the company background of Huatai Industries Berhad. Huatai Industries Berhad is one of the premier and longest established biscuits manufacturers in Malaysia, established in 1962 and listed on the Stock Exchange Malaysia in 1992. The biscuits are marketed under the brand name or trademark of Huatai and Luxury. Now, I will talk about the core activities, strengths and weaknesses of Huatai Industries Berhad. Huatai are involved in the integrated supply chains of these products, from manufacture to sales to distribution throughout the entire trade channels. Their strength is a market leadership position that holds a significant market leading position that assists the corporation in scaling up a new product success quickly. Meanwhile, the weakness is the high cost of replacing existing experts, which few employees are responsible for the company's knowledge base, and replacing them will be extremely difficult. Now, I will explain liquidity ratio that can be measured by current ratio. Current ratio can be calculated using formula current asset divided by current liabilities. A preferable current ratio is more than 1.2 times and above. Based on the graph, Seng Industries Berhad shows better trend of current ratio than Huatai. In 2016, Seng has better current ratio, which is 3.04 times than Huatai, which is 1.23 times. Even though Seng's trend is decreasing over the year, Seng able to maintain their current ratio more than 1.2 times, which show that Seng is in good financial health. Next is quick ratio. Quick ratio can be calculated using current asset minus inventory divided by current liabilities. A preferable and a good current ratio is 1 and above. Based on the graph, Seng Industries Berhad shows better trend of current ratio. In 2016, Seng Industries Berhad recorded the highest ratio, which is 2.63 times, while Huatai's is 1.03 times. This shows that the Seng Industries Berhad can repay its present debts without selling long-term assets. Other than that, there is also net worth capital that measures a business' ability to pay off its current liabilities with its current assets. Preferable net working capital ratio is more than 1.5 times. Based on the graph, in 2016, Seng Industries Berhad shows the highest net working capital ratio than Huatai Industries Berhad. This increasing ratio is considered good since it implies that Seng Industries Berhad is minimizing its investment in fixed asset and keep its asset reserve as liquid as possible.
The next ratio analysis is leverage ratios. This ratio can be measured by using the debt ratio. In order to calculate the debt ratio, we must know the total debt and divide it by total assets. The debt ratios of Huatai Industries Berhad and Hap Seng Industries Berhad are depicted in the graph provided. Both companies' debt ratio shows an expanding trend. However, keep in mind that the debt ratio is preferable when the percentage is lower. In this situation, Hap Seng Industries Berhad outperforms Huatai Industries Berhad in terms of financing decisions and proclivity to utilize debt to finance assets. The year 2016 recorded the best percentage for Hap Seng's debt ratio, which is 22.55%, while Huatai is 55.34%. Moving on to the activity ratios. There are three important ratios provided to make it easier for us to analyze which companies are effective and efficient in handling its asset. Firstly, the average collection period. This ratio has been calculated using account receivable over net sales and times 360 days. According to the graph, Hap Seng Industries Berhad has a good trend and is better than Huatai Industries Berhad as their average collection period is maintained and does not exceed 100 days in collecting their account receivable. The year 2020 recorded the best average collection period for Hap Seng, which is only 52 days. Secondly, the inventory turnover, which can be measured by the cost of goods sold divided by inventory in order to see how effectively the company uses inventory to generate sales. Under this ratio, Hap Seng Industries Berhad turnover rates are better compared to Huatai Industries Berhad because the higher is the better. 8.41 times in 2019 is the highest inventory turnover for Hap Seng Industries Berhad compared to 6.11 times for Huatai Industries Berhad. Thirdly, we also can use the total asset turnover that compares the value of a company's asset to the value of its sale or revenue. It is a metric that measures how effectively a company uses its asset to generate income. A comparison between Hap Seng Industries Berhad and Huatai Industries Berhad has been made, and we can see it through the graph. Based on the graph, it shows that both companies have similar trends. Hap Seng Industries Berhad asset turnover slowly and continuously increased in those 5 years. This means Hap Seng Industries Berhad is good at generating revenues using its asset. The best value for Hap Seng Industries Berhad was recorded in 2020 at 1.43 times, meanwhile for Huatai Industries Berhad, it's 1.1 times in the same year.
Now, let's focus on profitability. Profitability is the ability of a business to earn profit. In profitability, we analyze net profit margin, which measures how much net income or profit is generated as a percentage of revenue. The graph shows that the Hap Seng performs a better and stable ratio of net profit margin, just around 0.18% to 0.29% from 2016 to 2020. Meanwhile, Huatai shows an unstable ratio every year and also reached the negative ratio in 2018 and 2019. Moving on to the operating ratio that defines the efficiency of a company's management by comparing the total operating expense of a company to net sales. In this case, the comparison can be observed in the performance of Hap Seng's, which is better and more consistent than Huatai's. For example, Huatai showed a decrease in the ratio in the first 2 years, then increased in the following year, but continued to decline in 2019 to 2020. Next, return on asset refers to a financial ratio that indicates how profitable a company is in relation to its total assets. This analysis ratio looks slightly the same as the ratio collected from net profit margin. For example, Seng's percentage was just closer, around 0.18% to 0.20% from 2016 to 2020, compared to Huatai's that reached the negative ratio in 2018 and 2019. The comparison shows that Seng's return on assets is better. Now let's moving on to comprehensive analysis, where we will give a summary of the analytical ratios that have been studied. The first is liquidity. Under liquidity, Seng is in a better position compared to Huatai because Seng are more able to meet the company's short-term obligations. Both current and quick ratios for Seng reached the top in 2016 compared to Huatai. However, starting from 2017 to 2020, Seng and Huatai faced a decline. If these matters continue, the companies will be insolvent and bankrupt. To overcome this problem, both companies could control the overhead expenses, sell unnecessary assets, and change the payment rule with the vendors.
Under leverage ratios, Seng Industri Berhad is better and efficient in financing decisions and propensity to use debt in financing assets compared to Huatai Industri Berhad. Seng Industri Berhad has enough assets to cover all their liabilities, while Huatai Industri Berhad has fewer assets that cannot satisfy its enormous liabilities. The graph demonstrates that Seng Industri Berhad rose and the rise was gradual, allowing it to remain constant in terms of debt management. As a result, the firm has the potential to enhance its profitability in the future. In contrast, debt ratios of Huatai Industries Berhad recorded the highest ratio in 2020 with 62.84 times. The company is poorer in using debt to finance its investment, and this can affect the shareholder interest. The company must make some improvement immediately, such as keep pushing to increase sales revenue and generate profit. Seng Industri Berhad show better improvement of the firm's investment decision and management and capability to analyze the firm's asset. Seng Industri Berhad indicates good sign in collections of receivables compared to Huatai Industri Berhad. Other than that, Huatai Industri Berhad ability of inventory management and positive contribution to company profitability has been declining from 2016 to 2020. Compared to Huatai Industri Berhad, Seng Industri Berhad has better capability to generate income by using their assets. Insufficient demand for a company's product or services can be indicated by poor sales growth and diminishing sales over time. Huatai Industri Berhad should manage their asset effectively by accelerating the collections of account receivable and generate more income in order to contribute positive profit to the company. Based on the analysis collected in the ratio and comparative above, Seng Industri Berhad profitability managed to receive a good trend and is much more stable than Huatai, as Huatai's net profit margin and return on asset both received negative result in 2018 and 2019. It shows that the company was unable to generate their net income and maintain their performance of growth. However, Huatai was able to rise again back to a positive percentage in 2020. As they are showing improvement and performing to control its cost of operations, if Huatai Industri Berhad keep to show an unstable profitability in the industry, the company may always incur significant profits and losses, and that will reduce the confidence of shareholders to cooperate. To increase and stabilize profitability, Huatai should research new opportunities in the business sector and identify where they could expand the market. Hence, we can see that Seng Industri Berhad is doing better in its sales and operation compared to Huatai Industri Berhad. Generally, Huatai Industri Berhad should think about how to improve their liquidity, leverage, activity and profitability so that they can improve their management skills to generate higher sales. They also can increase their profitability by increasing revenue such as selling more goods or services or increasing the prices. Huatai can also improve their liquidity by controlling overhead expenses and selling unnecessary assets by eliminating items such as surplus business equipment that can provide a small sum of capital. Other than that, they can distribute cash to shareholders, which is an excellent strategy to strengthen the firm and to improve their leverage. As for Seng, they can maintain or improve even more in liquidity, leverage, activity, and profitability to preserve good performance in the future. That is all from us. Thank you for watching. Assalamualaikum.